Hi. Hi, Indu.
Hello. Hello, good evening, everyone, and welcome to another session on tax deducted at source from pathways. So we have already done. By the way, can anyone confirm if I am audible?
Yes, audible.
All right, thank you. So this is the third session on tax deduction at source. And also the final session. Okay. Before I get into the topics for today, let's have a quick recap of what we have discussed earlier in the last two sessions. I'll be just taking about 5 to 6 minutes on this quick recap, just to refresh your memories on what we have discussed and what we need to have in mind while we discuss the other provisions as well. So quickly, who's supposed to make a deduction on account of TDS? Any person who's making payment, and if that amount is taxable in the hands of the recipient or the receiver, then that's subject to TDS. And when are you supposed to deduct TDS? It is always payment or credit, whichever is earlier, which means when you make a payment or when you make an entry crediting the party in your books of accounts, whichever is earlier. The exception to that is the salary, where it is on payment. There are certain other sections also where specifically it says whether it is to be paid on, deducted on payment. And TDS is always deducted at a specific rate specified in each of the sections. So it is generally like 1%, 2%, 5%, or 10%, unless it is otherwise specified in the Act. For instance, in the case of salaries, it is deducted at the tax is calculated and it is deducted as TDS over the period of 12 months or whatever is the duration of employment on an average basis. So quickly going into specific deductions. In the case of salaries, we saw that Section 192 deals with it. Any person who's an employer who's paying a salary to the employee is required to deduct TDS at an estimated amount at the time of payment, and he is expected to deduct at an average, which means spread over the number of months in the year during which the employee is employed in the organization or under the person. Interest other than securities, which is normally the interest that you pay on your intercorporate deposits or your loans that you have acquired, those kind of interest. Any payer who's making a payment of interest to any resident person is required to deduct TDS at 10% when the amount of TDS is interest is more than 5,000 rupees. In the case of banks or public financial institutions, the limit is actually 40,000 or 50,000, depending upon whether the person is a senior citizen or not. If it is a the recipient is a senior citizen, the limit is 50,000. Otherwise, it is 40,000. However, remember, for our cases, which most of our clients are non-banking institutions, the limit is 5,000 rupees, and you are required to deduct TDS at 10%. Very important section is the payment on contractors. 194C deals with it. Any payer, any person who's making a payment to a resident contractor is required to deduct TDS. The TDS is basically 1% if the receiver is either an individual or HUF, or it is going to be 2% in any other cases, meaning a company, if you make it to a company or firm, it is going to be 2%. And the limit is any individual payment, if it exceeds 30,000 rupees, you are required to deduct TDS under 194C. Alternatively, if the payment is less than 30,000, but in an aggregate during the year, if it crosses 1 lakh, then TDS has to be deducted at the specified rate on that amount where the payment is more than 1 lakh. Commission and brokerage, it's again any person making a payment to a resident person, the rate of deduction is 5% and the limit is 15,000 rupees. Commission is essentially where you engage a person to do an activity which is supposed to do as your agent or otherwise, and you make a payment as brokerage or commission. It could be for a transaction dealing with your sales or your assets or whatever it is. Rent, 194I talks about it, where any person who is making a payment to a resident person is required to deduct TDS at 2% or 10%, depending upon whether it is a plant or machinery. If it is a plant and machinery, it is going to be 2%. If it is going to be land and building, it is going to be 10%. The limit is 2.4 lakhs, 2,40,000 rupees during the year. However, if there are co-owners, then the limit of 2.4 lakhs can be applied for each of the owners. Quickly on 194J, which is professional or technical services, any person who is making a payment to a resident person is required to deduct TDS at 10% for any payment in excess of 30,000 rupees. In the when the rate is 10% in case of professional services, when it comes to technical services, we have a leeway of 2%, and when you make a payment to call center, again 2%. Again, the limit of 30,000 is applicable for payments like your payment for professional fees, royalty, technical services, those kind of stuff. Whereas when it comes to director fees, we have already seen that there is no limit for the entire amount. TDS has to be deducted. Okay, certain transactions where even individuals are required to deduct TDS, whether or not they form part of, whether or not they can carry on business or any other activity, is the case where a person acquires a property from a resident transferor. When the property is more than 50 lakhs, then 1% TDS has to be deducted. In this case, unlike in other cases where a TAN number is required, in this case, no TAN number is required. A person, individual, has to deduct the 1% and remit in a certain form like 26 QB, or for each of the transaction, there's a separate form where TAN number is essentially not required. Rent on land and building, again, this is applicable to individuals in HUF, where you are a resident of a house for your own residential purposes, but you pay pay a rent of 50,000 or more, then you have to deduct TDS at 5%. And when should you deduct? In this case, it is going to be the last month in which you pay the rent, you will have to deduct. So essentially, it is March of every year you will have to deduct. Suppose the tenant vacates in between, then the last month in which he is required to pay the rent, in that month he has to deduct 5% TDS. Again, 194M is where I, as an individual, employ a works contractor or a professional and I pay more than 50 lakh in a year, then 5% TDS is required to be deducted and paid. Again, in this case, no TAN is required. You can deduct and just make a remittance, use quoting the PAN number of the deductor as well as the deductee, payer and payee. So these are the sections which we saw in detail over the last two sessions. Now this session, the last section, we will talk about perquisites. Again, perquisites, we had a very detailed session when the perquisites was introduced way back in July 2022. However, I'll touch upon it a bit because that's a very new section. We'll also talk about 194Q, which is on purchase of goods. A similar section, 206C, subsection 1H on sale of goods. I'll also talk about TCS on other items. Then we'll go into the general aspects like what is the consequences of non-payment, lower deductions kind of stuff. So getting into the first new section 194R. So 194R talks of benefits or perquisites. So this section was introduced in the Finance Act of 2022, so last budget, and it came into effective from 1st of July 2022. So what does this section talk about? It talks about benefits or perquisites. So what is that? Suppose I am into business and I give my another person who's connected to me professionally or business wise some benefits or perquisites. It could be some gift that I give to the other person. You could have seen that generally the medical representative comes to the hospital and doctors and they give them medicines and samples. And you would have seen the dealers, car dealers, insurance dealers, they provide incentives to their dealers. They run conference, part of it, they take them for some outing, or for that matter, when a particular sales is achieved by some dealer, they take them for a foreign trip or any domestic travel, whatever it is. So anything that is provided in connection with a business that has a value and that is paid by the business person, it amounts to perquisites or benefit. And this is taxable. Technically, the income that any person receives in terms of perquisite is taxable right from the beginning under section 28. So, however, there was no provision to really track this, and that is how this TDS provision 194R gave birth. So now it has become essential to deduct TDS when a payment is made on, when a perquisite or a benefit is provided. So who has to make the deduction? So the person who is providing the benefit, so a business person who is providing the benefit of either gift or travel is responsible to deduct the TDS. And who has to be the recipient? It can be any resident. So for any resident, when this benefit is extended, taxability comes into play. So what is the rate? Rate is 10%. And is there a limit? Yes, the limit is 20,000 rupees. So any benefit or perquisite which exceeds rupees 20,000 in a year, then TDS under 194R is applicable. So when should you deduct this TDS? It is before providing the benefit or perquisites, TDS has to be deducted and paid. So now let's see how this is going to be implemented. First, what does benefit mean? So I told you examples where you could give a gift, you could take them for a travel, you could even give them a voucher. So any benefit or purposes, whether convertible to money or not. So what can be converted into money? Suppose you give them a gift voucher, or for that matter, you pay them cash, then it is easily defined in terms of money or convertible into money. So that is one. Or certain cases where it is not convertible to money, you take them for a foreign trip, you give them a gift that cannot be converted to money. Even then, the provisions of 194R is applicable. So what do? You actually convert them into money equivalent and then deduct TDS. Essentially, this benefit should arrive from business or exercise of profession. Suppose I am an individual, I give them a gift, then, or for that matter, even if I am a businessman, but I give them a gift which is not related to business. When I say not related to business, is there a nexus between the person paying, the providing the perquisites and the person receiving in terms of business activity? Then the provisions of 194R will be applicable. So how do you deduct? So if it is cash, very simple. You take 10% and then deduct it. So suppose I make a voucher for 1 lakh rupee, then 10,000 rupees I deduct 10% and then remitted. However, if it is kind, then what do? So ensure that you value the kind, determine the value of the perquisites, arrive at 10%, and ensure that it is deposited before you provide the benefit. It can be either deposited by the person who's making the payment, who is providing the benefit, or even it could be the case where the recipient pays and the person who's providing the benefit can take the challan and file it in his returns. So either way is possible. However, ensure that it is done before the provision of the perquisites. Okay, how do you value the benefit? So it's always fair market value. Whenever an article is provided, whenever a gift item is provided, you arrive at what is called fair market value. How do you arrive at it? Generally, what is the price at which it can be sold or purchased in the market at an arm's length transaction? To have as an indicator, if it is a purchased item, say suppose I am providing the benefit or perquisite, I have purchased an item and given it as a benefit to my business partner, then it's very easy. You take the purchase cost and that becomes the value of the perquisite and deduct TDS on that. If it is going to be a manufactured item, so I am a manufacturer, I manufacture item and I give that as a gift or a gift to another person connected to me, and that becomes a perquisite in the hands of the receiver, and I am required to deduct TDS. In that case, the value is what will I get if I sell it to any other customer. So the price charged to any other customer will be the value of this benefit, and TDS has to be deducted on that. Okay. So that was 194R, the latest addition to the TDS provisions. Hopefully this budget we will see something which is getting close to 194Z. So we'll have a lot more to discuss probably after the budget on TDS. Now let's get into a section 194Q, which was introduced in 2021, which came into effect on 1st of July 2021. And this is on TDS on purchase of goods. So again, see, if you look at all the TDS sections that we discussed earlier or in the last few sessions, and we had a recap, mostly it will be a case where the income is the money that is received by the recipient is an income in his hands. For instance, professional fees or salary or rent, the person who's receiving the money, it's an income to him. It's a revenue item. Whereas what happened recently when it comes to your section like 194Q or a very corresponding section on TCS 206C 1H, it is actually not a revenue, because a transaction, a purchase and sale does not directly relate to a revenue. It's the seed of the revenue. However, TDS got into these areas as well. So you make a purchase, then you are required to deduct TDS on the payment that is made, and that's what 194Q is. So let's look at it in detail, because this is the first time we are talking about 194Q, at least in the series. So who's required to deduct TDS? A buyer of goods. I'm buying goods and I'll be making payment, then I'm required to deduct TDS. To whom will I be making payment? To the seller. And who should the seller be? It can be any resident in India. A resident in India from whom I am buying goods and making a payment, I am required to deduct TDS. At what rate? It is going to be 0.1%. And is there a limit? Yes. When my payment exceeds 50 lakh in a year, then on the amount that exceeds 50 lakh, 0.1% is required to be deducted as TDS. When it is payment or credit, whichever is earlier. So I buy goods and make a payment. I can make a payment after purchasing goods, or I could make a payment in advance, or I could buy goods, credit the party and pay later. In all these cases, whichever comes first, whichever is earlier, at that point in time, I am required to deduct TDS at 0.1% and make the remittances accordingly. First, the question will be, is all buyer required to deduct TDS? Thankfully, it is currently not for the small players. It is for the buyers who qualify under this criteria. When a buyer has a total sales or gross receipts or turnover exceeding rupees 10 crores in the immediately preceding financial year. So what does it mean? Currently, we are in 2022-23 financial year, or which is also called the previous year for the income tax purposes. So if the turnover of the buyer had exceeded 10 crores in 2021-22, he becomes liable to deduct TDS under the provisions of 194Q. When is this not applicable? 194Q, when is it not applicable? Suppose TDS is required to be deducted on the same payment by any other section, then 194Q is not required. Example is 194O, though we have not spoken about it because it pertains to e-commerce transaction. Suppose a e-commerce operator is required to deduct TDS under 194O. Suppose he has deducted under that section, then you are not required to deduct TDS under 194Q, and that's an exception that's provided. The other one is where tax is collected under 206C, which is TCS is collected under 206C for certain transactions, which we will see. Again, 194Q is not applicable. An exception to that TCS is 206C1H, which we will talk in detail in the subsequent slides. So remember the conditions. I'll quickly recap. Any buyer whose turnover was more than 10 crores in the previous year, colloquially, which means for in our case 21-22, he becomes liable to deduct TDS under 194Q. On what payments? Wherever he is making a payment of more than 50 lakhs on purchase of goods, is required to deduct TDS. Remember, this is not purchase more than 150 lakhs. It is actually making a payment of more than 50 lakhs during the financial year. So he is required to deduct at 0.1%, where on the amount exceeding 50 lakhs as a payment. Is not required to deduct TDS in two cases. One is where if TDS is deducted under any other provisions of the Act, or where TCS is collected under 206C. So now let's get into TCS. We have a hand raised by, can we have the questions at the end? You can?
Yes, sir. Fine, sir.
Okay, getting into TCS. So if you remember the first session, I had given you the difference between TDS and TCS. What was that? In the case of TDS, a person who is making a payment cuts a portion, and that is tax deducted at source. And generally, person who is making the payment does the DDS. When it comes to TCS, it is person who collects the money. Generally, is a seller of goods who collects money. What he does, he adds a portion on account of TCS and makes a collection. So that is TCS. So what happened? This 206C talks about 206C 1H talks about a new provision which came in 2019 on requirement to collect an additional collect the TCS on receipts from the buyer of goods or the receipts from person to whom they have sold. I'll talk about this section specifically and then come to the general TCS sections on other transactions. So why the reason is because this and 194Q is closely related. So I wanted to talk one after the other. You saw in 194Q that when a person purchases and he makes a payment for more than 50 lakhs, he is required to collect deduct TDS at 0.1%. A very similar section, but this is on the other side. So I am a seller of goods and I sell goods to any resident and I receive money for the sale of goods. I'm required to deduct TCS or I'm required to collect TCS at 0.1%. Is there a limit? Yes, similar to 194Q, there is a limit of 50 lakhs and above. So whenever I collect more than 50 lakhs, I'm required to collect TCS at 0.1% at the time of receipt of the amount. Again, 294Q was payment for purchases, 206C 1H was for collection on sale of goods. Limit is the same, 50 lakhs here, 50 lakhs there, 0.1%, 0.1%. The 194Q is purchase of goods, this is sale of goods. In 194Q, it was payment or credit, which was earlier. In this case, whenever you receive the money, you are required to collect TCS. Similarly, so is all seller required to collect TCS? The question is, excuse me. The answer to that is, again, the similar limit to 194Q. When for the seller, the turnover or gross receipts or sales exceeds 10 crores in the immediately preceding financial year, he is required to collect TCS. See, two conditions has to go together. First, we'll have to see whether the buyer or the seller, buyer in the case of 194Q and seller in the case of 206C 1H, is required to come under this section. To determine that is the turnover limit. So the moment I have crossed 10 crores the previous year, I become eligible to collect or deduct TDS or TCS from the current year. That's the first criteria. The second criteria on whom it has to be deducted or collected is when you make, in this case of collection, when you receive more than 50 lakhs in a year, you are required to collect 0.1. In the case of TDS, it is deduct 0.1%. In the case of you make a payment of more than 50 lakhs. So very similar provisions on different sides of the transaction. But then good thing is now should I collect both under 194Q and 206CH? Thankfully, 206C 1H, TDS is not required when TCS is not required when TDS is collected under any other section. One example is 194Q or 194O under the e-commerce operator. But the question will be, very interestingly, which will preside over the other? Both 194Q is applicable and 206C 1H is also applicable. So who has to collect? Because the section clearly says if either the TDS is deducted or TCS is collected, the other thing need not happen. The question will be very interestingly, when both are applicable, what do we do? So what happens in that case is, as far as 194Q versus 206C 1H is concerned, TDS under 194Q will prevail over 206C 1H, meaning the buyer will be required to deduct TDS at 194Q And once he does that, the seller is not required to collect TCS as the 206C1H. Logically, also, if you look at purchases precedes, so that's reason. Number two, I would say that 194Q precedes 206. However, with all this, there is also a circular which they have clarified, saying that when 194Q as well as 206C 1H is both applicable, 194Q will prevail, which means TDS has to be deducted, and in that case, TCS is not required to be collected. Okay, TCS is applicable to many other sales, and these are very old. It has been in existence for quite some time, for many years, I would say. So whenever a person sells liquor, tendu leaves, timber, mineral ores, and coal, TCS is required to be collected at a certain rate. But what is more important for most of our clients are the scrap sales. When you make a scrap sale, you are required to collect 1% TCS on that. And most of us would have experienced this when you buy a car. The person who's selling the car, if the car is more than 10 lakhs, you would have collected TCS at 1%. If you are a car dealer, then you will have to collect TCS at 1% on the sale which is more than 10 lakh rupees. Okay, now let's get into the general points that is applicable to both TDS and TCS. First, we have always seen that there are different rates at which you are required to collect TCS or deduct TDS. And in all these cases, we have seen in the first session that you collect TDS, you collect TCS or TDS, deduct TDS, and you remit them to the government within the 7th of the subsequent month. You also file a return in which you give the provisions, which you give the name of the recipient on whom you have deducted the TDS, and provide their PAN number also. So which means that whenever you are deducting TDS, you are supposed to get the PAN number of the recipient. Suppose the person does not give you the PAN number, or recently added one is the Aadhaar number as well. Suppose they do not provide the PAN number, the recipient does not provide the PAN number or Aadhaar number, then what happens is the rate at which the TDS has to be deducted or TCS has to be collected is twice the rate specified or 5%, whichever is higher. For instance, if it is in the case of contract, we have seen 194C, it is 1% or 2%. Twice the rate becomes, let's say if 2 becomes 4%. 4 or 5, whichever is higher, it becomes 5. However, in the case of 194J, professional payment to professionals, it is 10%. And the twice the rate becomes 20%, 20 or 5, whichever is higher, so 20 will prevail. So if PAN or Aadhaar is not provided, it becomes twice the rate or 5%, whichever is higher. The same applies to TCS provisions also. So a new section was introduced, 206AB and 206CCA, one on TDS side and the other one on TCS side, to ensure that an higher rate of TDS or TCS is deducted or collected for non-filers. So what is non-filers? Non-filers are essentially people who have not filed their income tax return. They are now subject to a higher rate of TDS and TCS. So what is the rate? The same, twice the rate or 5%, whichever is higher. Okay, just before I missed a point. When it comes to if a PAN number is not provided, I told you twice the rate or 5%, whichever is higher. So in the case of 206C1H, it is 0.1%. If PAN is not provided, it will be 1%, or 5%, whichever is higher. So there is a circular which says that you don't have to collect at 5%, you can do it at 1%. I miss saying that. So coming to the non-filers, so it is twice the rate or 5%, whichever is higher. So who's a non-filer? Non-filer essentially means assessee was not filed income tax return for both the previous year prior to the current year. So we are in 2022-23 financial year. If the assessee or the recipient or the payer, as the case may be, if they have not filed the return for 21-22 or 2021 and the due date has expired. So for these 2 years, the due date has expired. Then they become a non-filer. And another condition is, it's an AND condition. Aggregate of TDS and TCS in the previous years, both the previous year, individually has crossed 50,000 rupees. So when both the conditions are satisfied, they become non-filers, technically called specified person in the income tax, and then they are subject to higher rate of TDS or TCS. So to repeat, TDS, if they have not filed their income tax return in 2 previous years prior to the current year, and their TDS and TCS in the previous year was 50,000 rupees or more, then you are required to collect or deduct at a higher rate. So now the question will be, how will I know whether the person is a non-filer? Should I collect? So when the section originally came, there was an hardship of collecting the deductor collecting the income tax acknowledgement for the last 2 years and checking if the 50,000 rupees have been exceeded, all those things. Fortunately, now the income tax portal has a provision where you can check if they are a specified person in terms of whether they have filed their returns in the last 2 years or not. So if you go to the portal, there is a reporting portal. Go to the reporting portal, there is complaints under this TDS, TCS option. You select that option, give the PAN number of the recipient, then it will say if whether the is a specified person or not. If the specified person says yes, which means he has not filed the return, then you are required to deduct TDS at a higher rate or collect TCS at a higher rate. Okay. Now, suppose there are cases where the amount is paid without deducting TDS because the payer agrees to bear the tax component. So there's a concept called grossing up. So suppose I'm required to deduct TDS at 10%. So suppose I make a payment to an architect and I'm required to deduct TDS at 10%. However, I agree to pay it on my own. I pay him 10,000 rupees. Let's say 10,000 rupees has crossed the limit and that's the portion. Then what has to be done is this 10,000 has to be grossed up. What does grossing up mean? This 10%, 10,000 rupees should have been paid after deducting 10%, which means this 10,000 is actually 90%. So you take 10,000 rupees, the amount that is paid, divide by 90%. What is the 90%? 100% minus the rate at which you are supposed to deduct TDS. Suppose it is 5%, then it becomes 95% and arrive at the figure. That becomes the income on which you are supposed to deduct TDS and apply the TDS rate 10%. So I have given just an example. Suppose TDS rate is 10%, amount is 10,000 rupees. Income becomes 10,000 divided by 90%, that is 100 minus 10%, which is the TDS rate, which is 11,111. And TDS on that at 10% becomes 111. So this concept is called grossing up. This is how TDS has to be remitted by the payer, or for the matter, even the TCS portion. Okay, now there are provisions where I can approach the income tax officer, I can approach the assessing officer and tell him that, okay, please give me a certificate where I can get a lower reduction of TCS or TDS. How is that possible? So I'm supposed to receive the money, and 10% is normally deducted as TDS. I don't want that to happen. I wanted it to either not get deducted or at a lower rate. So I can approach the assessing officer. I'll have to file form 13. And the assessing officer will take into consideration whether that income that I earned during the year is out within, or no taxable income is there, or no tax is liable to be paid by me. What would be the situation is typically where I have some business loss to be carried forward, or though which I have to set aside and I have still time to do that. All those kind of situations will come. So the assessing officer will assess your previous returns, ensure that no, you are really not liable to pay tax in the current year. Then he will give you a certificate for lower deduction, and you will have to submit that certificate to the person who's making the payment, and then get a lower deduction. Anyone can approach, but the assessing officer will not. Today it is all online. He will not give you the certificate of lower deduction unless you are really eligible for it. And when will you be eligible for it? When you are going to end up in a scenario where the tax liability is going to be nil or at a lesser rate. And these lower certificate is always for a specified period. So the assessing officer will say it is for the assessment year 23-24. So then, which means it is all TDS to be deducted during this financial year can be done at nil or rate. In the assessing officer, in that certificate will also specify if it is going to be nil or a rate, lower rate. So you will say 190, it is going to be at 50%, which means if 10 is the TDS rate, then you will have to apply only 5%. So this is lower or no deduction. The other provision is providing certificate or self-declaration under 15G and H. What is that? So suppose I am recipient of money. It is applicable to a certain set of transaction. I have highlighted only interest, dividend, rent, because this is what is mostly applicable to most of the individuals. Suppose I have deposited money in bank, or I have invested in shares, and I am going to get interest. So what is going to happen? The bank will deduct TDS for any payment more than 50,000 rupees. Or if I am a senior citizen, any payment more than 50,000 rupees. So, however, this interest is going to, total interest is my only income, and this income is going to be less than my basic exemption limit. So then I can give a declaration in form 15G. 15G is for people less than 60 years. 15H is for senior citizens, more than 60 years of age. Saying that please deduct at a lower rate. So interest, dividend, and rent are the examples which we would want to discuss. On this, I can give a 15H or a G as applicable and ensure that the TDS is not deducted. So now the question will be, suppose I am the deductor and a person gives me 15G. Can a person give me 15G for when I am paying him interest of more than 2.5 lakhs? He cannot give. So if there is not a senior citizen, a 15G can be given for a maximum of 2.5 lakhs. Whereas when it comes to 15H, which is provided by a person who's more than 60 years, there is no limit. So even if I am required to pay more than 2.5 lakhs, I can still not deduct. However, that 15H will contain a declaration saying that though the amount is more than 2.5 lakh, which is the basic exemption limit, I am still not liable to deduct TDS because of various reasons. You can say I have other deductions, I can claim ATC, I have home loan, all those things. So there is no limit for more than 60 years, which is provided under 15H, whereas for 15G, maximum that can be provided is only 2.5 lakhs. Okay, the last section or the last section in this session is what are the consequences when you fail to deduct TDS or fail to collect TCS? First is fail to deduct or collect, right? What happens? First, this expense is disallowed and under the provisions of the Income Tax Act. It will not be allowed. I mean, subject, of course, 30% allowing it in subsequent years. Those things we'll discuss separately. But essentially, the first and foremost will be disallowance of this payment. The second one will be the interest. Suppose I am required to deduct TDS today. I have not deducted TDS, but I deduct 6 months down the line. Then interest of 1% for the period of the default will be applicable. Then if this is a routine nature, then penalty prosecutions can also be initiated. And I mean, of course, TDS assessment will happen and penalty is also likely to be possible. So there are 3 consequences when you fail to deduct: disallowance of payment, interest on amount that you are required to be deduct and till the date you have deducted, actual deducted, and the penalty is also a possibility. Failure to remit. So I have deducted TDS or collected for that matter, but I failed to remit. When am I required to remit? You have seen in the first session, I am required to remit on the 7th of the subsequent month. So we are in January 2023. I have deducted TDS now. I am required to remit it by 7th of February. If I don't do that, then interest at 1.5% per month, or for that matter, even a fraction of month, even a day, will result in 1.5% per month. Interest will be applicable. And again, penalty will be applicable in all cases of default, because penalty will come both under the specific section, also under generic section, where penalty is leviable on failure to comply with any provisions of any of the provisions of the Income Tax Act. So anything could happen. The third possibility is failure to file statement. What is that? We have seen you are required to deduct TDS, you are required to remit that. Then on a quarterly basis, you are required to file a statement with the information of whom you have deducted or collected, with their PAN number, and those amount you are required to file in form either 26Q or 20HQ, 27Q in case of NRIs, or 24Q in the case of salaries. If you fail to file that, you will end up in paying a late fee of ₹200 for each of the day for each of the form. So that is the case consequences on failure to file statement, along with penalty which could occur after the assessment. So with this, we come to the end of the TDS series. So we spoke of when and where TDS has to be deducted, and we spoke of discussed various sections on which TDS is required to be deducted. Then in today's session, we spoke of 194Q on purchase of goods, 194R, which is purchase goods, and 206C 1H, which is on TCS on sales. So essentially what we try to do in this last 3 sessions are address those TDS or TCS, which is very essential to most of the, or very common to most of the business scenarios. That's not the end of it, because there are about 33 items on which TDS is required to be deducted, but not everything will apply. For instance, We are not a banking institution. Most of, I mean, at least none of our clients are banking institutions. So they are not required to detect TDS under that criteria. So nothing specific to that has been discussed. So whatever is generically required, we have discussed. So if you want any specific, the audience here, if you want to have any specific, you can write to us. We will be free to let you know or share with you what are the provisions and how is it applicable to them. So with that said, let me open up to Q&A for the next 10 minutes and we can address them. So yeah, the floor is open. So you can start with your question. Or anyone for that matter, whoever has questions, please put it forward.
Hello, sir.
Yes.
Yeah, Bhaskar. Sir, first question, interest you have mentioned, no? 1.5%. If suppose delay in 1 day, it is applicable for 2 months or 1 month? 1 month.
1 month, 1 month. So suppose 7th, you pay on 8th also, you'll have to pay 1.5%.
No, if I want to pay 1.5% per 1 month or 2 months. If suppose December supposed to pay on 7th of January. If fail to file on 7th of January, then I need to pay 1.5% per month, only 1 month or 1.5 for 2 months.
No, your due date is on the 7th of this following month, right?
Yes.
So it will be 1 month.
But while filing the 26Q or whatever the section, that whatever the limit they are giving for extension of 7 days, it will be nullified and it will consider as December and January. Okay, maybe then then I should stand corrected. So it is running from the date of deduction then. Yeah, running from the last date of the deduction. No, from the date of day. So you have deducted in this month. Say, let's say January we have deducted. Yeah. February we are making the payment. Yeah. So my deduction is in January, right? So January 1.5 and February 1.5 payment. Correct. That's why if you pay on 8th or if you pay on 28th of February, it's coming for 2 months. Correct. Is there any particular? Is there any notification like that? Because while filing the form 26Q, it is calculating based on 2 months only. 1 day delay also. Okay. See, essentially the due date runs from the date of deduction. So for the remittances, it is the date is 7th of the subsequent month. The moment you make a default, so what happens? You have defaulted for from the date of collection deduction, right? So yes. you're holding the money from the government's money. Yeah. So they're charging for 2 months. Okay. And second is PAN or other is not provided. 5% or 20%, whichever is higher. That was the standing. But if PAN is not provided, it will consider as a PAN not available, and that 20% is the max higher rate, no? Correct. 20% is the higher rate. No. In case of contract, if the person is not giving the PAN, 5% is the actual as per the 206, whatever the section you had told. But since he is not providing the PAN number only, then PAN not available. In this case, 20% is calculating by this one. For 194C? Yes. It should be 5%. It should be 5% in case of is a defaulter in the 206 AB. If it's not a defaulter, since no PAN number only, then we can't find out is a defaulter or non-defaulter. Then it is considered as a not PAN is not available only. PAN is not available. Starting rate is 20%. It has to be twice the rate or 5%, whichever is higher. Yes, that is as per the new standing which is given now in the last 21 budget actually. When from the date of the no, the last 21 budget what came was the specified person, yes, which is for non-filers. Yes, sir. It's not for not providing PAN. It's there for quite some time. It's not a new section. Yeah, that 5% or 20% which came, that is the recent one with non-filer only. This when the earlier not providing the PAN,
that was 20% only from the day one.
No, no. See, the Act actually says the rate applicable to the provision, the rate in force, or 5%, whichever is higher.
Okay. And that I have a little bit confusion that only.
No, see, if it is 194J, clearly it will be 20%.
194J other section no issue.
194C, it's only 2%, 1% or 2%. So 2% becomes 4%.
And
In that case,
5%
it will be 5%.
Yeah.
Yeah.
If the PAN is there, if PAN is not there, that time also, since his PAN is not there or PAN is not a valid also, it will consider as 20% actually in 26Q.
Okay. Yeah, I mean, we'll have to check back. I'll check with the team who's actually into the execution. I will clarify that on.
Yeah, since wrong PAN also is calculating as 20%.
But law does not say that, but we'll see and we'll revert back on that.
Or tell them. Okay, that is okay. That's also from you can. And the tunas that 194Q, what you are told exceeding that 50 lakh, you are telling, no? If it's 50 lakh 1,000, then only 1,000 is applicable on 0.1%.
Amount exceeding 50 lakh only the TDS is applicable.
Amount exceeding at the time of exceeding. If it is the annual.
Suppose you pay 51 lakhs.
Yeah.
TDS is required to be paid deducted only on 1 lakh, not on 51 lakhs.
Yeah, in a financial year, 51 lakh, then on the 1 lakh only TDS is has to be required.
Correct.
Okay, sir. Thank you, sir.
Thank you. Any other questions? No questions. All right. If there are no questions, but you can raise this hand. I think it's not. All right. If there are no more questions, thank you all for attending these sessions, the TDS series, I would say, and we will come up with the fresh set of topics. If you are interested in any specific topics and it would be of interest to general audience, please do write to us, and we'll be happy to take a session on that. Thank you all.